Hey guys, Reece here. Welcome back to my channel. Welcome back to another video. Today, as promised, we're here with Zeke again. Last week, if you missed it, we spoke with Zeke on how he built his real estate agent business, his sales business, and made $130,000 in commission in his first 7 months as a real estate agent at 18, 19 years old, as well as, on track to make $200,000 year one. And in today's video, we're chatting about how he built his investment side of that business. So he's added 8 units to his portfolio in just about a year as well, correct?
Yep.
And that's what we're gonna dive in today. So guys, if you haven't checked out that video we filmed last week, go ahead and click the link up here. I'll link it so you guys can add that to your queue of videos to watch today. Check it out, super inspiring, some good little nuggets of wisdom from 19-year-old Zeke here, for any of you guys looking to get into sales as a real estate agent, or if you just want to see how Zeke built his business. So before we dive into today's video, go ahead and leave this video a like, and go ahead and subscribe to the channel if you're new here. Really helped me out a lot, and I really appreciate it. So thanks so much. Let's dive right into it. Anyway, so Zeke, we spoke a little bit last week. We spoke about your real estate sales business. Go ahead and give us a little introduction about yourself again, focused more on the investing side of things. So we know a little bit about you from the sales point of view, how you got started in sales. What made you also pursue investing, and how did you get started in that front?
So kind of how I got into sales actually was because I wanted to invest. So I made my first investment in November 2019.
Okay.
Kind of really got into multifamily through listening to Bear Pockets, which I'm not sure if you've heard about or not.
Yeah.
I'd listen to the podcast, see what the hosts were doing, the different guests, and that's kind of what really got my interest.
And now you made that first investment before you were an agent, or while, or were you licensed at that point?
So at that point, I've been licensed for like 2 weeks. So
Okay.
I got licensed just in time for that property.
So we know why many people go into sales, because they want to make a ton of money.
Mm-hmm.
You could take the time you're spending investing in real estate and focus 100% on sales.
Mm-hmm.
With you, making good money at this point, you could probably use that time to increase those sales. What made you want to also designate some of this time to focus on investing in real estate versus just pouring it all into the business?
Absolutely. So I actually make the most money from my investments.
Okay.
From just equity and cash flow and appreciation. And that's really the big payout that's going to come at the end of the day.
Mm-hmm.
So that's kind of why I focus on my investments, is because of that.
Okay.
But also it's just something I really enjoy.
And the cool thing is, so as a real estate salesman, you pay a ton of taxes, right? If you're making $200,000 a year-ish, probably paying close to 40% taxes, somewhere around there.
Yeah.
And the cool thing is, with real estate investing, like you said, that's going to be your biggest payday. Well, the nice thing is, for those of you that don't know, is a lot of aspects of investing in real estate are actually tax-free or tax-deferred.
Mm-hmm.
So the cool thing is, I know through personal experience working with you on a day-to-day basis, Zeke's going through a refinance right now, cash out refinance.
Mm-hmm.
And we can touch on that in a little bit, but the cool thing about that is that you can add value to these rental properties, pull out $50,000, $100,000 of tax-free income, because that's a non-taxable event.
Mm-hmm.
Super cool. You can use that money to scale your business, invest in other properties, whatever. So very cool. That's one of the reasons why I focus a lot on investing in real estate myself, because I like how your effort in real estate investing goes a little further because it's taxed less heavily.
Yeah, absolutely.
So talking about investing in real estate, what is your investment criteria? And then I believe, correct me if I'm wrong, but you focus primarily on multifamily and residential, right?
Yeah.
So what is your investment criteria, and what made you choose the criteria you're going to talk about here?
Yeah, great question. So kind of what I look for in my investments is I really want to be in an area that I know is going to appreciate a lot. And a lot of that happens close to downtown Columbus. So that's really where I like to invest. I'm mostly in multifamily, although I just went in contract for a single family.
Okay.
I look for deals that I can add value and force equity in through renovations or just buying below market. But a lot of times it requires some renovations. So I'm looking for properties that may need a new kitchen upgrade, a new bathroom upgrade, new paint, or whatever. But also properties that I know are going to cash flow after my expenses.
Gotcha. And then, so why have you focused on It sounds like 1 to 4 units right now. Do you have plans to go? For those of you that don't know, 5+ units is considered commercial resident. It's still commercial multifamily. So why have you stayed smaller? Is that just you're starting out still? Do you have goals to go 10, 20, 100 units?
Yeah, absolutely. So I kind of start out, well, I'm still in 1 to 4 units just because that's what I know, that's what I really have focused on. So my plans are definitely to go, 10+, 20+ units. I'm currently getting all my systems in play to do so, and that starts off with smaller deals. But my plan is in, 4 or 5 years, 100% to buy those bigger deals as the opportunities arise.
Awesome. So in addition to, the 1 to 4 unit criteria, you focused on multifamily. For those of you that don't know, multifamily is, apartments, single family houses, people live there, that's their homes. Why did you focus on that versus going, say, small retail, office, industrial, the commercial real estate?
Yeah, so I think one of the main reasons is that's just what I know. I think if a good opportunity arose in retail, I would probably take the opportunity. But at this time, kind of how I've set up my business model, I'm geared more towards the investment property, residential, and that's kind of why I've geared more towards that, instead of big retail offices or, restaurants or things like that.
That's what you've had success in as a real estate agent currently. And so it's kind of like a symbiotic businesses as they work together well at this point in time.
100%. They both complement each other.
So we briefly touched on how you make, or you are making currently more money as a real estate investor than actually a real estate agent. And that's pretty impressive because a real estate agent, if you didn't see the last video, Zeke made close to $130,000 in his first 7 months, on track to $200,000 year one. So do you have any numbers you can share with us on maybe one of your deals or multiple deals, whatever you want to?
Yeah, I'll tell you what, Reece, I'm actually working on one now. It's a duplex, and we'll kind of give you a rundown on that.
Okay.
You can ask questions about it. But so I am currently burring a duplex. For those who aren't familiar with a burr, it's a buy, refinance, or
all the R's, they run together. They do.
It's a buy, rehab, rent, refinance, repeat.
Yep.
And that's a burr. And that's what I'm working on currently with a duplex in South of Maine, which is just east of Columbus, downtown Columbus. So I bought this property off market. It was the first deal I got, November 2019.
Okay.
So I bought this one at $100,000 off market. It was rented, a 3-bedroom, 1-bath per unit, rented at $550 and $700. So we have started the renovations about 2 months ago, completed 1 unit. We're putting about $60,000 into it, so our all-in is $160. So we just leased 1 unit at $1,400, and we're completing the other unit, and we're going to market that one actually $1,450 because this one went so quickly because of the demand in Columbus. So we actually have the appraisal coming up, and we're hoping to get an appraised value of about $300,000.
Awesome. $140,000 profit on that one?
Yeah. So we're hoping to pull out north of about 120 there because we have to keep some equity there.
Sure.
So that's the plan with that one.
Awesome. Now, how did you get started on that first one? Did you go ahead and put 25% down on that, or did you leverage an owner-occupied loan? How did you get that one?
Yeah, great question. So how I got this property and how I'm doing my properties from here on out is I'm partnering with my brother. So he's a software engineer. He's got a great W-2 job. So I contacted him when I found this one. We kind of talked about it, would you buy a property if I found one? Kind of briefly talked about it, but once I found this one, I called my brother, and we ended up going 50-50 on that. And that's how I financed that deal. And then 2 others is that's how I financed.
Awesome. And we've talked about this multiple times on the channel where, you didn't have a lendable job at that point in time. Lenders are going to look at your income and they like W-2 or 2 years of self-employed tax returns. So at that point in time, you probably had no income to qualify with. And so that's a big issue for a lot of people out there looking to get into real estate, either down payment or lendability. And that's the cool thing, and I talk about this all the time, is partnerships are so powerful when it comes to investing in real estate. You could have gone 75-25 in your brother's favor if, say, you didn't even have any down payment. And so it's like you can start off small, you find a great deal, and anybody can do this. You don't need to be a licensed real estate agent to find a great off-market deal and buy it. So super cool. Yeah. So sticking on this first deal here, was there any fear that you had to overcome when, $100,000, that's a cheaper property here in Columbus, Ohio, but that's still not chump change. So, and 25% down on that one, right?
Yeah, 25%.
So $25,000-ish plus closing. I mean, that's a big commitment for the first deal. How did you kind of overcome that fear? And well, first off, were you fearful about that first deal? And then how did you overcome that and kind of push through and say, no, this is what I want to do, let's do it?
Yeah, 100%. It was super scary. Just going into something, not really knowing what I was doing, using a lot of my brother's money, and just kind of like, I'm pretty sure this is a good deal, but what if it's not? And I'm kind of
now, quick side note: did you tell your brother, I think this is a good deal, or did you have a lot more confidence?
Hey, this is the best deal we're gonna find, Okay. No, but yeah, so definitely had some fears with that. Overcame those by just talking with people who've done it before. Like, hey, you think this is gonna be a good deal? Am I doing this right? Am I doing this wrong? And that's kind of what put me more at ease in mind, just knowing that.
Sure. And you at this point in time had spent some time with your mentors, Joe and Carson. We spoke about them in the last video and how important it is to have mentors and what effect that has on your confidence and helping you with education. But you had spent some time with them at that point, right? And so you had people in your corner to kind of confirm that, hey, no, this is a great deal, or kind of give you that little extra push to say you're good to go on this one.
100%.
So that first deal and then future deals, how did you come up with this money to start investing? So when you bought that first property, you hadn't been a real estate agent long, right? And you hadn't made much money yet. So how did you come up with money to buy that one? Yeah. And then, how have you come up with the money to buy not just one duplex, which is impressive for anyone, but then a few other properties after that, leading up into 8 or so units at this point in time within a very short amount of time?
Yeah, great question. So just from savings from my brother and I that we just combined income and just started, buying these properties, 2 of them. We've had to put 25% down on, about $110K cash for those 2. Actually, just north of 110, I think it was.
That's pretty impressive. 18 years old, talking about investing $100,000 in cash. Pretty cool to see.
Yeah. So, and then the other one was an investment property, so I only had to put 3% down actually.
Very cool. Yeah.
So that one wasn't too much. I think that one was like $12,000, and I made that much in that commission.
Oh, really?
Yeah,
That's awesome.
I pretty much got in with no money.
Yeah, that's pretty awesome that 3% down. This was a owner-occupied loan, so I'm assuming you house hacked that one. Yeah. And house hacking, for those of you that don't know, you're buying a property with the intention to live in it for a year minimum, and you'll move in one side and then rent out any other open units. General idea. We'll save that topic and house hacking and how that can really increase your wealth substantially in another video. However, the cool thing with that is you put 3% down, you made a 3% commission. So that's pretty awesome that it leaves you no money out of pocket. However, do you recommend that if you're focused wholly on just real estate investing, that you go out there and you get your real estate license? Obviously, that's added substantial value to you because you make a lot of money as a real estate agent. But for those of us out there that are like, I'm not going to do sales, is there still value in getting that real estate license to help on the investing side?
Yeah, great question. So I think it comes down to several different things. How many deals do you plan on closing a week? You need to really crunch your numbers. There's a lot of things that go into becoming a real estate agent. It takes time, it takes money. It may not be worth it if you're just planning on doing several deals a year. Yeah. Even if you're doing 5 to 10 years a deal, are you going to do it better than someone who does it professionally?
That's the big question for me.
That is maybe not something you necessarily need to do. And is that 3% killing the deal? Usually not.
Yeah.
So, maybe you make an extra, $30K from getting licensed, but I mean, there's different things that go into it: brokerage costs, taxes, insurance. So, that really just comes down to you needing to crunch your numbers and see if it's worth it for you and if you can do it better than a professional.
That's the big point for me is, you have people like Zeke out here who are cold calling daily, multiple hours a day, or cold texting, and people who have perfected their craft. So those of you out there that are watching this video because you're really looking to get into real estate investing, I don't know if you're not going to focus on doing sales. I think it's much more beneficial to say, hey, forget about the commission. Sure, it's 3%, but finding an agent like Zeke out here who can find you an off-market deal. We spoke about how he finds off-market deals in our last video that you can go ahead and check out as well, and how he then gives those to his clients. Working with an agent like him who can really find these deals that are 5-10% below market, you're most likely not going to find that yourself unless you're doing cold calling yourself, and you don't need a license to cold call. So, may not be worth it for you. Something to think about, crunching those numbers.
Yeah, absolutely.
So on that topic, how do you find these great deals in Columbus, Ohio? For those of you watching who aren't local to the area, very hot market, especially when it comes to investment property, very low inventory. We spoke briefly on this, on how you cold text in our last video. However, can you break that down a little bit, and how do you find these great deals that either you invest in or hand to your clients?
Yeah, great question. So there's a lot of different things that goes into it, a lot of different systems, but broken down into very simple, anyone can do it.
Yeah.
I just go to the auditor website. I pull a list of different properties, and that may or may not have the owner's number, but usually it'll have the LLC, the properties under the name, and then do what's called skip tracing. So from public records and just yellow pages, I try to track down the owner's number. I may or may not find it, but then I text all those numbers, and then I'll follow up pretty often. And I may or may not get a response, but if I keep following up, I'll usually eventually get a response. And that's kind of how I do my off-market lead generation.
And that's the really cool part about real estate, is that the amount of money you make in real estate investing and as an agent is all down to hustle and commitment. So, you might call 1,000 phone numbers or text 1,000 phone numbers and, maybe close one deal, but that deal is a great deal that maybe needs a cosmetic renovation, but by buying off market and doing a little fix up, you add $100,000 in equity to it.
Absolutely.
And a lot of times, especially in a seller's market like it is right now in Columbus, you're not finding these deals on market. Not only are there no great deals on market, there's low inventory altogether right now, and so you probably aren't finding anything. So very cool that you've built that into your business model right now, both from an agent side where you can provide this to your clients, as well as finding these deals for yourself to build your wealth and passive income from that standpoint. So you've built your real estate sales business to a pretty good level so far. We know you're competitive. We know you're going to continue to build that further. Have you partially decided to invest in real estate as a way to kind of hedge against the eventual retirement, whereas a self-employed, salesman, you only make money if you sell, right? And so have you then gotten into real estate to kind of be your retirement account that many people with a W-2 job have a 401k IRA? Is this kind of your retirement account?
Yeah, absolutely. 100%. It's something I enjoy, so it makes it a little bit easier. But as a 1099, as a real estate agent, I don't have another retirement account. So it's crucial to build this up for once I retire, and I think I'll be able to retire a lot earlier. If I wanted, which I don't think I'll ever want to retire earlier. I enjoy what I do, but 100%,
But the nice thing is, from your real estate sales business, it's nice to be able to tell clients like, hey, I personally, put my money where my mouth is. As an investor, or as an agent who specializes in investments, you also own it, or own property as well. So very cool that you've built out these two legs of your business like that. So one topic that often comes up with new real estate investors is property management. So they don't want to be fixing the toilets at 2 a.m., which, first off, side note, I don't think has ever happened to me, but people can wait for a toilet until the morning. But side note, so what was the deciding factor when choosing, hey, I'm going to keep management in-house versus I'm going to delegate that out to a property management company, and maybe focus more time on sales?
Yeah, great question. So there's most certainly pros and cons to both sides of doing things. I kind of like to have control of my assets. I like to know what's happening, when it's happening, where's my money going. So I do self-management. I also will take better care of my properties than anyone else. Property managers are great, and there's some great ones here in Columbus, but there's just no way they're going to take as good care of the property as I'm going to.
So on that point, one thing you don't really realize when you're hiring a property management company is you have those costs where it comes down to your monthly fee, maybe a little bit of an upcharge on maintenance, things like that.
Yeah.
But the costs you miss out on are the fact that they're not going to push as hard to get that $1,200 in rent versus $1,000. They don't care about maintaining it as well. They're not going to answer maintenance calls as quickly. They don't care about the property as much. So there's long-term costs you don't really think about when you hire a property manager. So
absolutely.
So on that note, have you found it difficult to, manage the different aspects of your business? So, you're selling, 6 figures a year as a real estate agent. You also have 8 units currently and you're looking to grow that. We'll talk about goals here in a second. And you're also property managing. How have you managed all that? Because there's not that much time in the day to handle all this stuff.
Yeah, and that's something that's definitely been a struggle, but something I've been working on a lot these past several months. Just automating and delegating as much as I can. So I have some great softwares in place for property management. Actually just made my first hire, part-time hire.
Okay.
And he is gonna be helping a lot with just project management, helping some with property management, maintenance calls, things like that. He's great. He's gonna do a fantastic job in that sense. So really it just comes down to automation and delegation. Everything that I don't have time for, I am trying to find someone who does, and someone who does it better than I would.
Absolutely. And that's something that, I'm working on myself because I struggle with this. I like control. But the cool thing is like, you can't be great at everything. So why not spend the time to find somebody who's better than you at the things that at your weaknesses? And then in addition, automate and delegate to those people that can do it better than you.
Absolutely.
Frees up your time to tackle those higher dollar items on your to-do list.
Absolutely.
So, all right, last question of the day, and we'll close this video out. What is your goal when it comes to, the next year, maybe next 2 years on units? I think we might have touched on this briefly earlier in this video or the last video. They're running together now at this point. But what's your goal for these upcoming years?
Yeah, so in these next couple of years, I'm trying to get to 20 units before I turn 20. That's been a big goal of mine. And another one.
20 by 20.
20 by 20.
That sounds good.
Yeah. Another one was I wanted to live for free, which I'm doing now. I don't pay any home expenses for the property I just bought as an owner-occupant.
Super cool.
The
Powerhouse hacking.
My mortgage.
Yeah.
Another goal is I want the company to cash flow positive, $50,000 a year.
Awesome.
In the next 2 years. So right now we're cash flowing about 45. I think it's 47 a year.
Okay.
Profit. But we just made a hire, so that knocks it down.
Sure. Okay.
So we want to get it back up so we can expand even more.
Perfect. Awesome. Well, Zeke, thanks for stopping by. Thank you for answering our questions on, how you become a successful real estate agent and investing. 19 years old, crazy to be putting up the numbers on either side of the business that you have. I know I'm trying to catch up here myself. So really appreciate you stopping by. We'll have to touch base here in the next year or so, see how the business has grown and how you've the goals you've achieved and the new goals that you're setting. So
absolutely, I appreciate you having me.
Awesome. Thank you guys for stopping by. I really appreciate your support. If you haven't already, please go ahead and leave a like on this video. Comment any questions that you have. I work with Zeke on a daily basis, so I'd be happy to answer any questions that you guys ask, touch base with him offline here. So thank you guys so much. Subscribe if you're new to the channel. Really appreciate it. I'll see you guys in the next video.